Want to write off an entire piece of equipment in the same year you buy it? Whether it's a laptop, a delivery van, or a dentist's new x-ray machine, Section 179 is your go-to write-off. And thanks to the One Big Beautiful Bill, this powerful deduction isn't going anywhere. Section 179 lets businesses immediately deduct the full cost of certain assets placed in service during the year, instead of depreciating them slowly over time. The One Big Beautiful Bill locks in and expands the 2025 limit to $1.25 million, with phase-outs starting at $4 million in total purchases. In plain English, you can keep writing off a lot of gear fast. So what can you write off under Section 179? Computers and laptops, office furniture, vehicles used for businesses, tools and machinery, business software, and equipment for medical, dental, or industrial use. The asset must be used more than 50% for business, new or used, and in service by year-end. Bonus depreciation may get all the buzz, but Section 179 gives you more flexibility with certain assets, especially vehicles and software. The 2017 Tax Cuts and Jobs Act nearly doubled the Section 179 limits, but the future was unclear, especially with bonus depreciation set to phase out. The One Big Beautiful Bill clears it up. The high deduction limits stay in place, the phase-out thresholds rise with inflation, and businesses get long-term certainty to plan equipment purchases. This makes Section 179 a permanent part of smart tax strategy, not just a year-end scramble. So who benefits most from Section 179? Small to mid-sized businesses buying equipment, professional offices upgrading computers or furniture, contractors and tradespeople buying trucks or tools, doctors, dentists, and specialists with high-cost machines, and anyone making capital investments to grow their businesses. If you're buying business gear this year, you should be thinking Section 179. Let's say you run a landscaping business. This year you buy a new $38,000 truck and $12,000 in equipment upgrades. That's $50,000 in assets. With Section 179, you can deduct the entire amount in year one. In a 24% tax bracket, that's a $12,000 tax savings. And remember, if you buy even more, Section 179 lets you deduct up to $1.25 million. Here's your planning tip. Use Section 179 for the assets you control, and bonus depreciation for the rest. Section 179 gives you choice. You can apply it selectively to certain purchases, unlike bonus depreciation, which applies across the board. And if you're financing or leasing the equipment, you can still claim the full deduction, even if you haven't paid in full yet. Just make sure the asset is in service by December 31st, or it won't count for this year. Talk to your tax pro and coordinate your asset purchases with purpose, because when used right, Section 179 is a cash flow game changer. Glad you can join us. If you're ready for a smarter approach to taxes, check out Taxmithing, our personalized tax strategy process. Reach out to us anytime.